Hey guys, this is Simon with ToughTrader.com. Wanted to do the preview for the week, and I wanted to cover two specific issues in the in preparing for the week. So one is just a general look at the charts. That'll come in a moment, right? But I want to set my goal for the week, right? What is my goal in terms of getting prepared for the week? And I want to do a couple of things very, very specifically. To getting set up. Number one, I want to be clear on the time frame that I'm trading in, right? I have my journal here, and I've outlined which time frames I traded best on and which timelines I traded most poorly on, right? So this is really, really important, right? I want to sit down and I want to write, what is my setup that I'm looking for? Which ones paid me the best, right? What was my entries, my exits, and my stops? I want a clear picture of what worked last week. All right, let's get rid of this. And what didn't work last week. And before I get rid of this, let me read it off really quick. Past performance is not indicative of future results. This is for educational purposes only. If you'd like to pause and read the entire legal notice, be my guest. Otherwise, we can move on. So, importantly, what did I do well? So going into this evening, right, before I start the week, and this is an important coaching note, I want to write down, what did I do well last week and what did I do poorly? So pretty straightforward and direct with all my coaching clients and the members in the room. And so what I did poorly last week was on actual execution of my trade plan. I had a great read. The zones were placed very well, right? And I'll give you a great example. On Friday, I was long ES on this trap back in right here. I'm going to show this to you. I was long. Wow, they're not letting me move it, but I will spread it out. There we go. I was long literally at the close of this bar. This is pretty much the low of the day, right? Stop right below the low, kept me the low of the day, and it had a great extension. I believe my entry was 24.68 and a quarter, and it rolled all the way up to 26.54. There's absolutely nothing to be upset about in that trade. It was fantastic. So what didn't I do very well? Well, when I was in number one, I entered the trade based off of price action. It wasn't pre-planned because that entire area, this entire 61.47 was a critical level, right? It was the 50-60 big picture back. So before I took the trade, I did not write it down, right? I essentially forgot that we were in the 50-60 back, and that's really common, right? You get into a trade, you make the shift into focusing on all the way through the price, and because I thought, well, you know, I'm experienced, I don't have to go through all the steps, I didn't write down the reasons why I was entering the trade. So all I had to do before I got into that trade was write down in my book, look, this is a big picture 50-60 retrace, and I'll show you what I mean by that. Just take a blank chart. Should pop up here, and we can go to a 15-minute time frame. And this is a trade that I am pretty interested in on a regular basis. So let me draw this up. So this is the 50-60 retrace, and I know full well when we don't reject quickly out of that 50 retrace, right? So all I had to do was write down here in my notes. We gapped up. Internals were strong, right? I'm going to go and show you that because these are all these things I could have checklisted through prior to, sorry, wrong chart, prior to sitting down and taking that trade. So on my internals chart, right, if you look right out of the gate, this is Friday morning, advancers weren't that strong, but advancers actually were strong out of the gate. It was decliners. Advancers were strong out of the gate, plus 1,700. Normally anything above 1,500, I'm not looking to fade. Number two, the advanced decline ratio was strong, well over 1 right out of the gate, right? Those are two hints for me immediately that I don't want to short. And secondly, so then and what I'm trying to do is step you through what the conflict is, right? So you look at a gap up. We had strong internals that argue against shorting out of the gate. We had a push down, and in this push down, they were not able to close below the low of the first 5-minute bar. Again, these are all things that I could have done looking at it from a 5-minute basis. Here, I'll show you, right? They were not able to close below the low of the second bar, right? And this was a pretty hard push. If you go look at tick and you look at delta, this is a pretty hard push. They made a significant attempt to break that low. And really, we couldn't even get into any more than the half gap. And as soon as we hit that half gap, we closed right back into the range, right, on an attempt to break to the downside. So those things I could have had written down in my book, which was strong internals, right? No ability to push in and really inside the first half hour. Next, once I took that bar, this is the bigger picture, 50-60 back from the swing high to the swing low, and we did not reject out the 50 retrace. And what that would have done for me is would have shifted my mindset. What happens is you get tunnel vision while you're trading. All of a sudden, all your effort and all your focus, instead of being on all those bigger picture items, right, which is, do we have internals that are strong? Have we held the gap? Have we failed to trade back above value from a TPO standpoint? All those things were true, but then I got locked here. So here's what happened on my decision-making process. When I got long here, just let's call it 9:15, right? When you come over here and look at NQ, all of a sudden around 9:15, NQ was not looking, originally it was looking pretty strong, and then all of a sudden it started to look weak. And I made a knee-jerk response. I said, wow, NQ is getting weaker as ES is trying to hold. And then even there, I didn't write that down. I just visually eyeballed it and said, it's getting weaker. And I forgot about my market internals that said the market was strong. Lastly, once I took the trade, I was clearly not committed. So I want to say that again. Once I took the trade, I was not committed to it, right? Because my stop was pretty reasonable. And again, these are all criticisms. When things go well, I say, hey, things went really well, and I call them out from the top of the rooftop. When things go wrong, that's where all the learning opportunity lies, right? So what I did is I flipped back around and I journal about this. Why? It's okay to have this trade go south on me one time. I didn't lose any money on the trade, no big deal, right? Except that I left approximately 48 to 54. I left approximately 6 points, right? That's $300 a contract. That's a great trade, right? I pretty much had close to the low of the day, and I just had to be able to tolerate this risk. So when I go back and look and I go, well, what can I improve from last week? Well, that's the one thing that stands out was having the correct read, right? And a failure to write down each of my steps. Now, that's just arrogance on my part because I know full well, and I tell my coaching clients to do that, I didn't do it. So just like Dr. Steenberger always talks about, I want to take one thing that I did well, my read of the market, and my placement of the zone was completely valid trade location. It worked both from the back end for a short, it worked from the bottom end for a long, and my read that we would push up and out was correct. I want to repeat that next week, so I've written that down. I had a good read last week and really all the way through the week, but my execution was consistently poor. And when I go back and look at the structure of what made my week consistently poor was I did not outline my trade prior to entry of the trade consistently and what I was thinking of both in short time frame and long time frame. So what I would have liked to have done here would have been, I'd like to have written, we gapped above the 50 retrace and failed to close back below that 50 retrace, which was lying at 26.47. Number two, I failed to note that we caught the trap back in and that market internals were strong, right? And all of these could have been listed out. And then lastly, I should have simply said, look, my stop is reasonable for the risk. My entry was 26.48. My stop was right there at 26.46.50. Let's just throw in another point. And you end up with about a 2.5 point stop, right? In exchange for 6 points. That was a very good risk reward. So I'm pretty clear coming into the week what I want to do. I want to write down what indicators I'm using, whether it's volume, tick, what the setup is, whether it's a trap setup or it's a gap that's showing no weakness within the first half hour and market internals are strong. But I want to note all that beforehand, and that'll keep me out of hyper focusing on price. I want to focus on structure instead of price, right? And then the last piece that I did not note on that trade beforehand was the logical place for the market to push up to would have been this 26.56 was my goal. And even though it did not hit it early this evening in Asian session, that 26.57 3/4 did get hit. So that's a perfect example of how I had the proper target to the upside, right? I had the proper entry on the downside. Now, what did I do right after that trade? I didn't freak out. So there were some things that I did do right, even though I didn't do these steps right. I didn't freak out. I didn't start chasing it. I didn't start forcing my hand in any trades. We were in choppy conditions, right? I simply lost patience with the trade. I think I kicked it out right here just before it lifted. I waited 15 minutes and really, and what I wrote lastly was, if I'm not willing to take a reasonable stop on the trade, don't enter. So the question that should be at the top of the list is if I take this trade, right, and I'm writing down in my journal, what do I have to see to invalidate? Now, I want to say something. For some people, it might have been the weakness in NQ was reason enough to invalidate the trade. It could be that, hey, I waited 15 minutes from the time of entry and I wasn't able to lift from my point of entry, right? And I'm uncomfortable there. As a trader, that's fine as long as that's consistently your parameters. So you should have listed out why you're entering the trade, what would be a reasonable reason to exit the trade. I'll give you another excellent example of that, right? Some people, my stop would have been right down here, but if you advanced all the way up from 48 all the way up to 52 and you got 4 points, some people would want to move that stop up to their break-even trade location or even higher, right? So it doesn't matter which process you're following as long as you're consistent in that process. And what that keeps you out of is being emotional. And what you want to do as much as possible is be your own algorithm. You want to write down what your process is again and again, and that lifts you out of being emotional and knee-jerky in your trading. It keeps you out of over-trading, and you want to be structured and focused on what the process is, what your process is, not my process, your process, right? And that's interesting. That's an interesting distinction between being a trading coach and a trader. My process is very specific. I know what I'm good at, right? And I know what I'm searching for, right? And that process may not necessarily fit you as an individual trader. What you want to do is, for example, if you're in my room, you want to take the best parts of my process that fit into your personality and into your psychological structure and adopt those in, right? And then you want to leave out the pieces that don't work. And I'll give you a great example. I have one member in the room, Ron. He's great at swing trading. He'll take the locations I highlight, right? Or even his own locations, but he'll take the locations and he'll say, hey, I'm looking for entry here. And he may say, you know what? I'm looking for a shot all the way up to 26.58. I'm willing to take my stop at this location. I'm not going to exit until I get my target or we close out at the end of the day. Right now, that's not my style, but his ability and his ability to be patient through price action, even when he's uncomfortable when positions roll back through him, that's his own personality trait. I hate when positions roll back against me, right? That's why my time frame is much smaller. So he's taken what I've taught him. He's adopted his own pieces into it, and then he's written his own trade plan around his personality and what fits his risk profile the best, right? So that's very, very important, whether you follow me or you're following, there's all kinds of great guys out there, FT71, E-Mini Wizard, doesn't matter who you follow. Don't follow them blindly. Learn from them, learn from me, and then take that process and make it your own repeatedly, right? So now let's jump in and take a look at the week. We're going to look at ES and NQ, and then we're going to kill this. So because I want to get home and enjoy, I want to enjoy my Sunday evening with my family. So let's pull this up, and let's jump to the S&P to start with. And this is the TPO and the volume profiles combined into one. Let's erase all these lines. And let's go first take a big picture look. So number one, when I look at this picture, there's nothing bearish about this picture. The first thing I want to point out on this is that every trend line that I can point to here that's even remotely responsive, that even looks remotely right? There's nothing that's pointing down or downwards on a bigger term picture, right? Buyers are still clearly in control. We are starting to form a consolidation phase. It looks like that consolidation phase will go from here, and it looks like approximately that they are trying to use the bottom of that area as a balance area, right? And we've had a history of doing that before, right? See, we break out, come back in, back and fill a little bit. But importantly, if you look at past consolidation phases, once we establish that swing low, we never break that swing low again. So you'll see this was quite an ugly day, referring back to around the 25th of October. You'll notice that we never broke that swing low, and you'll notice, so it's important to stay balanced, right? Even within the balance or within the picture of the market continuing higher, we were able to get quite nice rotations, right? So what's happened here so far? if you look from a daily standpoint, here's where we broke out from. This was the gap to new highs. This was the move up. So if I take the 50-60 from here to here, what you will see, this area right here is the 50-60 retrace. And you can see we've dipped our toe into that 50. We have not tested the 62 retrace, which is important. That means on your calendar, you really want to highlight 26.20 and a quarter. If we don't close behind that 26.20 and a quarter, there's absolutely nothing bearish about this market, guys. Take it to the bank. If we do not close behind 26.20 and a quarter, the market looks good. And closing behind the 26.20 and a quarter does not make the market bearish, but it does set us up for the first. That's kind of like your first marker that, hey, there might be a problem. We actually traded behind 26.20 and a quarter and closed behind 26.20 and a quarter. The next marker is, do we have the ability to get back above and hold above, right? Is it a shakedown below, right? It would depend on what the process looked like. Next, what's likely for tomorrow? What's our range? Well, we know ES in general tends to not trade down more than 30 points intraday, and that tends to be an extreme day. So if we take that 26.55, I subtract 30, I get 26.25, right? What that means is if I get back down to that 26.25, 26.20 area, in my trade plan, what I will do, because it'll be volatile at that point, right? We would be down 30 points. And I want to make sure I don't get two things happen to me in this area. I want to make sure I don't get caught out with getting a good position, but we get volatile on the stretch. So my trade plan is, I don't expect to be in this area, but if we are in that area, half size double stop to make sure I catch the U-turn back up. What has to happen before we get into it? So we know what the extreme looks like going in for tomorrow, right? And it's obviously highly unlikely that we trade more than, if you look at the biggest stretch we've had, which just occurred, right? So from the high was 26.62, the low was 26.07. So it was less than a 60-point range from high to low. So if I go ahead and I take out 26.54 and I subtract 60 points out of that, that puts me at 25.90. And I know if things got really, really ugly, as they did early last week, right? That's probably going to be the neighborhood that it gets me into. Why? Because that puts me back to a retest of the breakout, which is a very normal pattern here. That's a breakout, retest, and then continuation higher. I'd obviously look to be a responsive buyer in that area, right? So now let's get it more local. Let's bring it right down to the areas that are critical for this week and for tomorrow, right? So I'm going to stretch this out a little bit more. So what have I done so far? I've laid out what the terrain is likely to look like, both from a point of view of expansion of energy, how far we're likely to expand one way or the other. And secondly, I've looked at where the extremes are potentially. So now what I want to look at is, where am I likely to find resistance and where am I likely to find support from a day-to-day picture, right? Not going into, I'm looking exactly here to buy and looking exactly here to sell, but more general, what has to happen? Where's my support? Where's my resistance? So let's go look at that. Okay, so this was Friday's high. This was Friday's low. Okay, there is now a naked volume point of control sitting at, and a naked TPO point of control sitting at roughly 26.40.50. That is on a rotation down. That would be roughly a 15-point rotation down. I would expect responsive buyers out of that location roughly the first time in. So in order for that to happen, the first thing that has to occur is we have to trade outside of value area low from Friday. So first, in order to even consider 26.40.50, we have to be trading below and holding below 26.49. That sets us up to come down and test 26.40.50. There is a open gap and there is a Dalton's gap. So 26.44 is Dalton's gap. And then there is a closing print at 26.42. And where I would like to be laid up for that, for looking for responsive buyers, is 26.40.75 to 26.39. Either of these two locations could step in my way and find responsive buyers first. This is the only area I'm really comfortable stepping in with size without getting a reversal pattern. From this location, I would have to see reversal patterns first, which include getting above my last seller, tick divergence, right? And or volume divergence would be one of the, or a delta push that fails to push a new low. One of those three things. I am willing to put risk on in this 26.40.50 area. Where am I looking for? If I get into this location from 2640.50, I would be looking for responsive buyers to push us back up towards 2646 to 2648. That would be my initial upside goal, or whatever the mid of the day is for that day. So I want to be clear. I'm laying out. In order to go down, I have to trade below 2649. Pretty simple steps, right? Right now we're trading at 2655. Number two, I expect responsive buyers at 2640.50. We are not bearish in my eyes unless we trade and hold below 2640.50 and fail to get back above. So in this area, I'm looking for traps. Oh, and in addition, I'm looking for traps in that area as well. So now I have a pretty clear understanding. This area in blue, that's my value area, and I know it acts as a neighborhood where if I'm long, these guys should come back in and defend. That's very helpful, right? I know if I open up underneath this value area that this area now becomes my resistance, right? Which does not mean we can't trade through it. It just means it takes a good chunk of energy on most occasions to trade through. And if we start underneath and trade all the way through, it tends to exhaust on top, which would be approximately the gap fill, or 2650.75, somewhere between those 2 points, right? On the other hand, if we open above that location, specifically above and holding 2655 to 2653.75, and we fail to trade below there and we consolidate. So what would that look like? It would look just like Friday. We opened above this location. Let me erase these lines. Too many pictures. We opened above this value area right here, right? You can see we clearly failed to trade back in. Here, I'll put that out. We failed to trade back into that value area, right? And what that did was set us up so that our natural target was this neighborhood. I refer to the value areas as neighborhoods. Return that call. A push back up into this neighborhood where we should have at least a challenge or some responsive buyers. Why? Because in this neighborhood, remember, if you bought up here, right, the market closed at the low of the day, and then we had a significant push lower. So you got to remember, guys, that when we're initially pushing back up, this is why you found sellers on top, because these guys are just more than happy to get out of their position. They're like, wow, I was down. If you entered this trade at 2660, which was roughly the point of control from that day, and you find yourself at 2628 area, you're like, wow, I'm down 30 points. Thank you for giving me the opportunity to get out. You're going to have supply come back in and be offered to these guys that are buying through. Now, if we open above these guys, this whole area should now act as, in general, a very wide area of support for continuation and a push back to the upside and new highs on ES. So that's the lay of the land on ES. We're kind of trapped in the middle between this neighborhood and this neighborhood, and we're going to have to resolve one of those two areas in order to push out. And Monday has no economic data and tends to be the narrowest range day of the week, so I would expect balance. For tomorrow, doesn't have to happen, but that is what I would look for in the trading day. You can see in the past when we get caught between two critical areas, the market tends to balance out anyways, and we have those two areas below and above. They're well defined. So what that shifts me to is looking at the price action and looking at rotation sizes and looking to trade on the edges of the day to find late sellers to trap them and push back up, and late buyers to trap them and push back towards the mid, and have my patience cap on because it tends to be slow and grindy on days like that. And the last piece is, if we end up with an open drive higher or open drive lower, I'll know that the character's changed and we're not going to get a normal Monday balance day. And then I can shift my trade plan to my hat on the fly for a trend day type plan. And by the way, most of the time, understand, if we get a trend day up, I'm not looking to grab that trend day up. I'm more than happy to just simply set it aside. My primary trade is looking for pushes down and then finding responsive buyers for the push back up. Less so for the pushes up, for the move back down, just because we're trending to the upside and the market has been going up, and the layups, for the most part, have been on nice trades back to the upside. So that's ES. Let's go look at NQ really quick. Let's hunt it down. NQ. I have a crude oil, S&P, Russell, and the NASDAQ. There we go. Okay, so let's erase this and start over. So first of all, let's jump out to the big picture really quick there. Okay, number one, when you look at the big picture, right, this is not a bearish picture. You can see we have higher highs and higher lows all the way through. there was some damage on the NASDAQ, but even if you look at the quote, the damage, right? This was the last bullish gap up. Again, we had it about 1025. We have failed to close or even test the top of this open window. We have failed to test the gap, the half gap in between, and certainly the points of control and the value area that was set up below. All of this has to get tested and broken in order for us to go, wow, we're now actually bearish. We're trapped back into the old range, and we would push lower. Nowhere close to that, right? So while NQ is acting a little bit funky, right, because it's stuck in this wide range on a day-by-day basis, there's no institutions that are going to look at that and go, oh my God, you know, my trade is perilous here, and I'm in a bad position, and I'm going to get run over. I don't think any of that starts until we get below this trade location, and that simply is unlikely to hit, right? When we look at the wider ranges, about 100 to 130 points down has been the extreme. So if I look at from where we are closed on Friday, 63.58, I take out 100, that puts me at 62.58. If I take out 130, that puts me about 63.20. That's where I end up landing. That would be about an extreme relative to the information it sent me last week. Also, we easily had 100-point up days. So again, from 63, 63.65, let's see, that was about 63.60. If I put in 100 points, that puts me about 64.60, and that would put me at a new all-time high. And that's about the range, the widest range I'd be looking for on Monday. Of course, always short Armageddon or some amazing piece of news to come out. I wouldn't expect us to trade outside of those bands. We had a pretty good picture of what higher volatility would look like earlier in the week, and that would pretty much contain those areas. I obviously would want to be looking to be a responsive buyer down here for pushes back up. If we were to get down into that 63.20, I'm not necessarily a short at that extreme because the market has repeatedly shown that it has an ability to close at the high and repeat that feat many days in a row. So again, I'm more eager to look for pushes down and find responsive buyers, particularly once I get above my last strongest seller. Once I close above that group of sellers, depending on my time frame, I want to either look for pushes down against that trend to get long, or I just simply want to be long and not wait for the trend. It just depends on how big that stretch is, right? But particularly on 30 and 60 and 90-point stretches on NQ, I am looking to be a responsive buyer for pushes back up, right? When we go and take a little bit closer look, and again, this is part of just being balanced for the week, right? Let's go take a little bit closer look, just like we did on ES. And the first thing it tells me is we're really not short unless we trade below the value area low, 63.62. We're currently trading at 63.67, right? So when I look, if we do get below 63.62, we have a volume point of control at 63.46 and a TPO point of control at 63.34. So I'm going to note specifically in my trading journal, right, that at 63.33, when we trade there, even if we trade past it, that there's nothing really to repair in this profile, either here or in the profile below. 62.97 is really too big a stretch to get to, so I'm not going to worry about it on the downside. I am therefore looking this profile intraday from Friday needs to get repaired, particularly just above 63.62, right where we're trading right now. When we trade, if we trade above now, on the other hand, right? So really, once we trade past this 63.62, I am looking for opportunities for reversals, right? I really don't think we'll push down. If we open inside this range, my guess would be around 63.62. We're going to find another push to the upside. Now, if we're trading on the underside of 63.62 to start the day, we're then going to ping pong between these points of control and these anomalies in here between 63.46 and 63.34. This is the next area I'm looking for responsive buyers. I do not think we are bearish unless we get below. As you can see, we're one timing and value keeps shifting up. I need to see a close below both this area and the 63.30 for me to really think that we have any chance of being bearish whatsoever. I'm really looking for responsive buyers in NQ. There's nothing about the market right now that tells me it's bearish. Now, the flip side of that, if I come in tomorrow morning and I see that we're trading above 63.92. Just like on Friday, right? If we're holding above and trading above, I'm going to be looking constantly for responsive buyers. Now, this was a rare day. We gapped up. We held the gap for over an hour. If you'll notice, we never filled the market close, the 3:15 Central Time close right here. We did fill Dalton's gap at the high. ES did not. That's Dalton's gap right there. But we never traded back into value. And until we do trade back into this value area and hold inside this value area, I'm going to assume that buyers are in control. Now, the flip side is true here. If we open inside 63.40 and fail to trade back into Friday's value area, starting at roughly 63.62, I will look for responsive sellers as we approach or attempt to push and fail to push into this area, particularly if we fail to push in within the first hour. Again, barring market internals. That'll be the first clue that we may push down. But again, once this area, the 63.50 area, gets repaired, my guess is that they're going to attempt to push back up and at least re-examine 63.70, 63.80, possibly 63.90. Okay, the flip side of that picture, right? Cover that back up. Oops, there we go. The flip side of that picture, if I go back and look at what's to the left, it is pretty desert-like above, okay? So this was the high. This is my prior high, right? And if I go and look at that, so everything above that green line, and when I look, you'll notice this point of control has already been tested. It weakens this area. It would make it much easier to push through, right? So we've tested, and remember, every time you test a critical area, you can see we tested and rejected. We opened right below and rejected. That was that huge down day that we had. And then when you look behind that 11/28 date, you will see that there's really nothing to stop the market from continuing to push higher. That is an all-time high right there. And as I said, it's already been tested. They could come back in for a second time, but I am not eager to fade that the first time in, particularly if we get in a situation where we're consolidating above 64.03, right? I'm really looking for pushes back down until even if we trade up in this area, until we trade back down and hold below 63.99. So let me be clear about that. Let's say we open at 64.20 tomorrow. Unless I trade, once I gap up, I would expect that gap to hold. The only way I'm looking to be bearish is if we push back and close below that 63.99. Once we do, what I would expect it to do is come back down, fill back in these areas, this 62.67, 63.75, and once it completes that, right, I would expect it to hold this area. I wouldn't expect it just to blow this out. Why? Because if we open above, people who bought in this area are going to feel like, hey, I won. As they come back in, they're going to go, hey, I want to defend this location for a push back up, okay? Conversely, if we open up underneath, those guys will turn sellers, and then we'll have to depend on this location defending us for push higher. Either way, that's my 2 minutes. Again, I think the most important part of this is not of any trading plan is not your actual where you plan to trade, but how you manage your journals, how you manage your emotional condition when you trade, and how you lay out in that map your entries, your exits, and your stops, okay, and how well you abide by that. And I think the most important thing to do is not actually to prepare for your winners, because everyone feels good when they get winners, right? It's actually outside of that one winner. When you get too many winners, you feel too powerful, too confident, and you start to overtrade, or you take trades that are of a lesser degree, right? That's one danger area. The other danger area is if you expect to make a profit. This is really important. If you expect to make a profit, then you take a quick stop, right? Like everyone's had that experience. I'm in, news hits or an algo hits, and then bam, my stop gets hit, right? Try not to respond to that. Go to your journal, and this is what I write down when that happens. I was stopped. That sucks. I don't like to get stopped. I don't think anyone else does. But it's within the variable of my trade plan that I know I have a high win rate, but I do not know where my losses are. They're always randomly distributed. Losses are a cost of doing business. Anyways, my name is Simon. I do both the room, the Tough Trader room, and one-on-one coaching with individual traders. If you'd like to visit us in the room, email me at tradeandperform, TRADENPERFORM @gmail.com. and I am more than happy to extend you a 5-day pass into the Rim. I'm going home. I'm going to watch, wow, I forget what it's called, but Guardians of the Galaxy with my daughter. And I will talk to y'all. I will talk to y'all later. I will sleep well, and I'll see everyone in the morning, 8 a.m. Guys, have a great day. Trade smart. Follow your trade plan. If you don't have a trade plan, stop trading till you get one. I don't care whose it is. Any trade plan, right, executed in a mediocre fashion is better than no trade plan and just guessing at what you're doing. Anyways, have a great night. Talk to y'all later, guys. Thank you for joining. For those who joined us live, good night.